Hello, ETF fans. Mike here, coming at you with a video insight, a factor flavors video insight. Today, I'm going to walk through the S&P 500 factors through the lens of ETFs. So Invesco has a lot of different smart beta, strategic beta strategies that are overlaid on the S&P 500, as well as State Street, as well as ProShares. So there's just a number of factor strategies that track the S&P 500, and it's a great way to see what factors are driving the market. And I wanted to show everybody how I do it on a regular basis, what my watch list looks like. So we're just going to dive in to our member access platform. And what we're going to do today is we are going to navigate to our databases, ETFs, and what I'm going to do is I have a number of watch lists. I recommend all of you to put together watch lists of competitive products, groupings, whether it's by factor, by region, by country, sector, you name it, because the database becomes incredibly more powerful as you create these watch lists. But one watch list I have created and continue to refine over the years is equity US S&P 500 factors. And it's just a great way for me to track what's going on with these different factors, all tracking the same starting universe of stocks, right? So every one of these ETFs that's in this list applies some sort of factor overlay to the S&P 500. We can walk through them real quick. Obviously, for relative purposes, I include SPY, so the S&P 500 market cap. We have S&P 500 equal weight, growth market cap, value market cap. Then we have the Invesco high S&P 500 quality, S&P 500 momentum. ProShares has their dividend aristocrats only on the S&P 500, low volatility, high dividend. We have RWL, which weights the S&P 500 based on revenue. Actually did a featured insight on revenue, equal weight, and earnings per share, market cap and earnings per share a while back. If you haven't checked it out, take a look. It's a fun way to look at the market. High dividend, low volatility, pure growth, pure value, high beta, enhanced value, value and momentum, and then minimum variance. So a whole slew of different factors. A lot of these look the same. A lot of them are very different. But what I like to do when I go through this, just start off really simple. What are the leaders year to date? So I'm going to change my data tab to my performance tab, and I'm just going to sort by year to date. And let's see what we got here. Not surprisingly, this has been a momentum market year to date. So SPMO up 28%. As a FYI, by the way, you can see this is data as of close on 10/13. I'm recording this on 10/14. High beta is doing great. Growth, not surprisingly, doing great. But what we can see also is there's only 4 of these. What do we got here? 16 ETFs that are outperforming the S&P 500 market cap. Not surprising considering how well the mega cap names have done, but we can see there's 28% here S&P 500 momentum. Just scroll all the way down. S&P high dividend, low volatility, basically combining 2 of the worst performing factors year to date, and there you got it. It's a 26% divergence between the best and worst performing ETF, factor ETF tracking S&P 500 as a starting universe. I mean, that's a wild divergence and really just kind of illustrates what goes on there. Next, I might take a look at more of a long-term risk return profile. So I'll go to my risk benchmark. These are updated monthly. And let's just kind of take a look through some of your standard risk standpoint. First and foremost, we'll do annualized return on a 3-year basis. SPMO again, SPLV down at the bottom. Big difference. These are annualized returns, so huge difference across these strategies. Might want to take a look at your Sharpe ratio. Not surprisingly, your top performers there, but only 3 of the, on the 3-year basis, only 3 of the factors have a better Sharpe than the S&P 500 market cap. Just keep scrolling over a little bit here. I always like to look at up-down captures. So on an up capture basis, not surprisingly, your momentum, your growth strategies. But I would note, SPMO, that's pretty wild over the last 3. That's a pretty positive up-down capture on momentum strategy there. Conversely, beta's got a huge up capture, but it's also got a huge down capture, right? SPYG growth, nice up-down capture ratio there. Some pretty crazy outliers on the negative side too, though, like pure growth, 93% up, 123% down. Just kind of a good way to track the market. We have to remember that been in this market where mega cap has dominated, right? So it's really difficult to outperform the market. But um, something to look at. We can look at that on different time frames. Next thing, let's just take a look at our derived analytics, and let's see what our assignments are for each of these strategies, right? So what that means is our derived analytics, I've talked about it in previous videos, but our derived analytics are purely rules based. So there's no, we set the rules and we look through in the portfolio every night and it gets assigned. So regardless of how we classify it, these derived analytics are going to assign based on the portfolio currently looks. And if we just kind of go by size assignment, you'll see, hey, look, there's actually a couple of mid caps, right? S&P 500 is a large cap, but when you do it by dividend or peer value, you end up getting a mid cap profile. Everything else shows up in that large cap style assignment. Got a bunch of values here. Going to see the high dividends, enhanced value, revenue. Weighting by revenue currently shows that value tilt. Obviously, value, dividends, value with momentum, high dividend, low volatility. Got a bunch of gross and then a handful of cores here, being equal weight, minimum variance, low volatility, and interestingly enough, the Spider market cap S&P 500 value ETF is showing up as core. And we could go through all this stuff, but a couple of things I'd love to show, just kind of our quality score. If we rank by quality rating, the growth and quality names are going to be the highest. Obviously, if we rank by value, slide over here a little bit, going to see those value names. So these are purely rules-based, looking at the underlying securities to come up with these scoring systems. Next thing, let's take a look at within the portfolio here is let's take a look through sector breakdowns using our GICS licenses and see, just kind of where different sectors set. If I look at comm services, momentum's got a lot of comm services, growth has a lot of comm services, discretionary, a lot of growth and value, pure growth and pure value, but the biggest there, that 22%, by far the largest allocation. Staples, not surprisingly, the dividend aristocrats, those consistent dividend payers. If you look at energy, the enhanced value strategies and the value and momentum are picking up a lot of energy names right now. Financials, we can go through all of these, but I think it's just a great way to look at the market. The last thing I like to do is I'm just going to go ahead and throw all of these into my overlap analyzer. So I'm going to select all of my tickers, click my overlap analyzer here. And what we're going to see, with the exception of the market cap stuff, right? SPY and SPY G, SPY and SPY V, the revenue weighted, seeing a lot of green. Green meaning very low overlap, right? So, across all these strategies, there's very few ETFs in commonality. So they're all really, really unique. And I think it's just a great way to look at the market, track the market, know what factors are driving the market through the lens of ETFs. It's easy, it's free. Just reach out if you have any questions, the team at ETF Action. But just a quick look at the markets through S&P 500 factors and what's happening. I just wanted to highlight that as a Factor Flavors video insight today. So hope you enjoyed it. If you have any questions, reach out to Team ETF Action. And thank you for watching. Have a great day.